In trading, knowledge is power, and lack of knowledge in what you're doing can be costly, very costly. So you need a solid foundation of quality market education. Whether you're new to trading or a seasoned veteran looking to add advanced strategies to your arsenal, there's always something to learn and something to improve on. And now you can access the same knowledge that professional traders receive with Market Rebellion's Trading Education. I'm Bill Johnson, Head of Options Education here at Market Rebellion, and we've assembled a comprehensive curriculum based on decades of real trading experience, covering everything you need to know about trading options from beginner to advanced. We go way beyond the nuts and bolts of options theory to teach you how to apply specific trading strategies and the techniques needed to adapt your trades when markets shift. Regardless of your goals, you'll gain access to the education you need with easy-to-consume lessons so you can learn to trade with confidence, enhance your knowledge, and master the practical skills required for market success. So please join us for in-depth trading education only from Market Rebellion. Hey, good afternoon, Market Rebels. Stu, it's that time
Yeah,
again. Another
it
Coach's
is that
Corner.
time again. Yes, it is.
Rolls around fast. But before we get started, I want to give a couple of shout outs to some very special people. First, and I know you know who this is, Gato y Pato
Oh, yeah.
for all of their amazing help, and to one of our newest viewers and followers, to Stormtrooper. Kind of a unique screen name there. We're not quite sure who it is, but we want to say hello anyway, and thanks for joining us. But today, Coach's Corner, we got another good one, Stu. This comes up a lot with traders, and I think with a lot of the market action would be very appropriate. And so let's go find out what our Chalk Talk question is. So here we go. Chalk Talk. Little thought-provoking question for everyone. We're going to answer it at the end. If a stock crosses through a moving average, whether from below up or from above down, does it show a change in momentum? That seems to be what a lot of traders say. They'll say, well, you know, the stock just crossed up through it. So now we can see that the momentum has changed, and therefore I know it's going to be going up because it's going to be staying above the moving average.
It's kind of a common theme, isn't it, Bill?
A
In
very common.
technical analysis, let's look for the crossover.
Yep, whether it's the moving averages actually crossing over or the actual candlesticks crossing through, people take it as a sign of momentum. Is that really what's happening? So we kind of talked about this in Miami, where it's kind of a big theme that we're going to be doing for this year about illusions, things that people think they see in charts or other aspects with options that are just not there. So you've probably guessed what the topic is. Want to take a shot at it? Do moving average crossovers show momentum? Pretty straightforward. So once again, the reason we came up with this is we hear this a lot from everybody, and especially when they say, well, now we know it's going to be going higher, or now we know it's going to be going lower because it crossed the moving average. And I wish it were that easy. And unfortunately, it's not. It really has to do with the math or the geometry of a moving average. So we just want to kind of point that out to you, maybe like we talked about in Miami, hit the brakes, hit that yellow light and say, is this really what it's telling me? So before we do, quick reminder, we're only going to do one of these today. It's a short slide deck, marketrebellion.com/get started. Lots of great material just like this, articles, videos, all kinds of stuff to help you get started to get a solid footing. So moving averages, traders
Hey, Bill.
use, yo,
Bill, as I'm thinking about this, as we're presenting this, what as part of our theme, you said our theme for this year. What we're going to be doing a lot, everyone, is showing you what it's not.
yeah.
This is, the whole illusion thing. That this is part of that.
Hmm.
Um, this idea, if you wind up 25 people, 25 traders, and ask them to define momentum, you're going to get
25 different answers.
25 different answers.
Yep.
And here we are trying to say that because this happens and this happens, then this is going to happen.
Right.
The
That's always
traders
the
fall
killer.
back on that all the time, and then they get shocked when it doesn't happen.
Shocked when it doesn't happen. So if a stock turns down through a moving average, then they believe that momentum has changed and is more likely to fall. Or in some cases, they say, now we know it's going to fall. And then on the flip side, if the stock turns up from underneath the moving average up through it, they believe the momentum has changed and is more likely to rise. And their reason for saying this is they say, well, it's because once it changes, it stays above the moving average. Or the candlesticks, once they cross below, that they stay below the moving average. And so it's very clear that it's a change in momentum. Once again, it's a story that fits the pictures and unfortunately is not quite right. So let's bring up a chart first of all. And in this market, you can see there's lots of times we always get crossovers, but there have been a lot lately. But here's a really good example. So here we have Apple, and when it came up through here, people say, oh, look at this. We got a 2 candle break. It's a change in momentum. And they say now the candlesticks are going to stay on top. That's how it's a proof that it's a change in momentum. Over here, when it cracked through the top, they'll say, well, look, it stayed below the moving average. And so that's a proof that there's more selling pressure. And that kind of gives them confidence that the moving average is predictive. Again, it's a story that fits the picture, and that's unfortunately what a lot of people do to base their plans with options.
Well, this line of candlesticks is actually a story to fit the picture of the price action, isn't it?
Absolutely, it is.
It's
Yep,
it's a story being depicted that where the data that it's depicting is the price action of the day or the week or the minute. It's
that's
just
right. Yep. So let's take a look at the math behind it and see why this tends to always, not tends to, but that it does stay that way. So I've got a couple of examples. I did this first one here uh, in fives because we're going to do a 5 day moving average. Not that you would use that on a chart, but it's just to make the math easier to follow. And that way we're going to get nice whole numbers. Then we'll look at another one that's not quite so easy. So this first column, we're just counting by fives. We can think of this as prices. We're going to go 5, 10, 15, 20. We count up to 25, and then we start reversing 20, 15, 10, 5, and then we go back up. Doesn't matter. You can pick any type of a sequence, but I did this so we could get a definite rise out of it, and then a fall, a rise, and a fall. So think of this as your stock price. Now, one thing to notice to show that it's not momentum, this is completely made up. These aren't stock prices. So again, this is why when traders are looking at charts and they say, well, there must be something special about it because these are real prices and real people placing trades. It does not change the math at all. So what I've also plotted on here in red is a 5 day moving average. Take your pick, 20-day, 50-day, 100-day. It's the same idea. I just did it so we can keep smaller windows. So why is it that when the prices cross the blue line, cross from above below, look at that. It tends to stay. We definitely have momentum crashing through because the red line stays above the blue.
Bill,
And then when
just to be clear here, it wouldn't matter if it's whatever the term is, if it's weekly or monthly or
same story.
annual, even
That's just
um,
scaling.
or 5 day or 10 day or 100 day. None of that really matters.
Doesn't matter. Correct. And it's the math is the same. So if the prices come from underneath the moving average, blue comes from underneath the red, traders go, look at this. It must be momentum. It's a crystal ball because once it crosses through, the blue stays above the red. So it's definitely a change in momentum. You can't deny that. Well, we can. Again, it's an illusion. It's a story that's designed to fit the picture. But why does it seem to work? Why is it that we're going to start over here that once we crack through it, we tend to stay below the red? Well, it really works out. It's because moving averages are lagging. So let's take a look at the math here a little closer. Here's what's going on. Remember, we're going to do a 5 day moving average, not that you would do this in the real world, it's just to make it easier to follow. So here's our first five, let's call them prices. What's the average of that? Well, they're symmetrical, so it should be the middle one right there at 15, and that's what that number is right there. Now, we roll a moving average, just if you do a 1-day lag, it's going to shift by 1 day. So now we're going to go to the next five. But notice what happened. We lost 5. So think of it that we lost $5, but we gained 20.
Picked
So
up
what's the net?
15.
We have a
15.
net of 15 divided by 5 is how much?
3.
Is 3. And that's why our moving average went from 15 to 18.
Cool.
All right. Now
Really
we go to the next one and we see that we lost 10 and we gained 15, which is a net of 5. Divided by 5 is 1. That's why we went from 18 to 19. We picked up 1 on our moving average. All right, so notice what's happening, that anytime the left number is bigger than the right, 25 is bigger than 15, 20 is bigger than 18, and then we flip. Now it's no longer true. That's a cross. So if we point right here, you can see in Excel, can you see that little white box right there? It says 19.
Yeah.
It's telling us that that is the crossover. So it's just the fact that we're still holding on to some relatively high prices while the blues are dropping to lower prices. Once they start rolling into the mix, then it drags the red down. But that's why the red absolutely must stay above the blue, or the blue absolutely must stay below the red. So watch
It's
what
just the
happens.
moving average catching up.
It's the moving average catching up is all it is, right? It's not a change in momentum. So let's go from, let's say we'll do these 5 right here. Okay, so there's a 5-day window, right? 1, 2, 3, 4, 5. For that window, we lost 20 and we gained 5, which is a what?
$20 loss.
A $15 loss. We lost 20 and gained 5.
Oh, 15. Okay.
We got a 15, so that's
Nice.
minus 15 divided by 5 is what?
3.
Minus 1. I'm sorry, but
Wow.
it's minus 3. Correct. So we got 50. So that's why we lost 3 here.
18
went
to
from
15.
We went from 18 to 15, and that's because these bigger numbers dropped off. See, it's just trying to catch up. And then when we go from here to here, what happened? We lost 25, we gained 10. That's a gain of what? I'm sorry, a loss of 15
15.
divided by 5 is 3
3.
minus 3. That's why we go from 15 to 12. And then this will happen. Now, again, you can see here that the left is now below. Okay, left is less than the right, left is less, then it's less, but then all of a sudden it's more. That's a crossover right there. And we should see that that should happen at 11. So if you look at the bottom of that white box, it says 11. That's where we cross from going from lower to above. So now what happens? Now we're going to start increasing. So if we pick another 5-day window, dropped off 15, gained 20, that's a gain of 5. Divided by 5 is 1, and that's why we picked up 1. So it's just the way that the math has to work out. It has no choice. So the point is that just because you see that it crosses doesn't mean that there's something magical about momentum. It might be, but the moving average cross does not show that. It's just an artifact. It's just a reflection of the way that the math works out.
Bill, can I say that there's nothing magical about any of this?
There's nothing magical about any of it once you understand the math of how it works. Exactly.
And again, guys and ladies, that's not to say that it's not a tool, and it's not to say that you can't
No.
use it, you shouldn't use it, or anything like that. Just understand that it is a tool, that it's derived from some formula, and that it doesn't indicate that something absolutely has to happen.
No, it's just the fact that, like you said, it's a good way to word it. The moving average is trying to catch up. So once you can see we've got lower and lower numbers. That's the blue line going down, but they haven't quite caught up to the red. That's why the red is still going up, and then it starts catching up, and now it's starting to pile on these lower numbers. But it still has to be above the blue. because it's always catching up. It's always taking the higher values, and until they do what? Roll off in the other direction. Okay, so that's just going to keep going. Now, here's one. I did this again just to make it work with whole numbers. Not going to work out that nice and neat in the market. Same idea, similar picture. Let's do it with 1 through 5. I'm sorry, 1 through 6, and then 5, 4, 3, 2, 1, and then count back up. Same idea. So if we look at the first 5 numbers, symmetrical, middle is the average. There's 3. All right, so we have a value of 3. Now watch what happens when we go to the next window. We lost 1. We gained 6 for a net of 5 gained divided by 5 is 1, and that's why we picked up 1 on the moving average. On the next one, what happened though? Now we lost 2. We gained 5, which is a net of 3, divided by 5 is what? 0.6. And that's why we went from 4 to 4.6. All right, so you can just see that keeps going. We'll do one more here. We dropped off 3. We picked up 4 as a net gain of 1, divided by 5 is 0.2. So we go from 4.6 to 4.8. And then what happens, again, notice left is bigger than the right, left is bigger than the right, until those numbers flip. And then we eventually get to where the left is less than. Okay, so these are going to be crossing points. And once they cross, now it's having to catch up, and it's always going to sit on top. It has to. Once they cross from below, the red line must sit below. It has no choice. So the main thing is to understand the math of it, that it is not a dead giveaway that something has changed. Again, this is made up data. So why would you think that because it crossed here that it's now guaranteed to continue down this way? Right? I could have easily just made that flip around.
Bill, is this where we look at each other and we say, well, it'll continue until it doesn't?
It'll continue until it doesn't. That's the better way to think about it. But the main point is that when you see, in this case, we're assuming the blue is the stock prices. Just because it crosses a moving average, take your pick, 20, 50, 100, whatever it happens to be. Now they're not going to, this is going to be very responsive because it's only a 5-day window. The longer the moving average, the straighter it becomes, but the math is exactly the same. And that's why longer moving averages like a 200 take so long to turn.
Or even how about 500 or
1,000? 500, right. That's why they look straight on your chart even for if you're zoomed out quite a bit, because they just take so long for all of that old data to get pulled, to fall off the chart. But here with 5 days, it should be very quick to respond. And you'll see that the shorter the window of your moving average, they're going to be very quick to respond. So at any rate, the main thing we want to get to traders, that's again kind of our theme here, is to get people away from the illusions and the things that they think are true just because they can see it with their eyes. So I hope that helps everybody to understand what's actually happening with the moving average. And there's nothing special about, oh, look, the blue is below the red. Oh my gosh, it's staying there. Look at that. It must be a change in momentum. It's telling me something. And once it gets back up here, now it's above the moving average. It's magic. It's not magic. It's just the way the math works out. It has to. So just again, like Stu said, it doesn't mean that moving averages are bad. We use them all the time in Q&A classes, but we take it from a different perspective. We're also trying to do what we talked about in Miami. We're trying to figure out what everybody else thinks about what they're going to do. So just keep that in mind. If you're one of these traders who thinks that this is a perfect time to enter a call option because now I can see the momentum is turning up, that is a false assumption. It's just a story that fits the picture. So I think that was really about it. Kind of a short and simple one today, but I think a very powerful one because especially in these markets here, we've been seeing a lot of whipsaws. We get a lot of questions about this in Q&A.
It has to do with, people use this term way too loosely, risk management. How do I manage this trade? And you might use this and say, oh, well, when it crosses over, I should get out.
I should get out.
That work should be done prior to entering the trade. The work about when it doesn't fit me anymore, even as simple as my thesis has changed.
Exactly.
When should I get out, Stu? Well, how about if you get out at the top? Well, we all know that's not going to work.
Good answer, though.
Well, how about this? Well, my expiration is coming up. Should I roll this call out, this 90 delta call or 100 delta call at this point? Should I roll it out? I don't know. Would you sell the stock? See, it's the wrong question. Leaning on this kind of stuff to help you make a decision is okay, but just understand that it is not the end all be all answer to your hopes and prayers and riches scheme.
Not a crystal ball, and that's what we hear so many people talk about. And again, the reason that they point to it is they say, "Well, look, it's proof. As soon as it crosses, it definitely stays below." And we're just trying to show that absolutely positively must happen. It's not because it's foretelling the future, it's because of the way that the math works out. So just be careful of how you make those interpretations. So I think with that, it brings us up to our Chalk Talk question for the riveting answer, if you haven't figured it out already. If a stock crosses through a moving average, does it show a change in momentum? So what do we think the answer is here?
Yes. No.
According to a lot of our people, the answer is yes, but the answer is actually no. And hopefully, we showed you in a very clean way why it absolutely must
Yeah.
be true.
We're
Yep.
we're just showing you the math behind what you think you're looking at. It
Right.
doesn't really show anything. It just shows some math becoming a picture crossing over or lagging. This whole thing about, that's another thing. This is a lagging indicator. Well, they're all lagging indicators.
Every one of them.
The MACD, the RSI, look, they're all lagging indicators. They're all trying to tell you when to buy and when to sell. But
Right.
at the end of the day, and nothing can really tell you this is it. I wish it were. If it were,
Oh, I wish it were.
we wouldn't be here, to be honest with you. I mean, I might be here, but I probably wouldn't be here.
It's not as easy as people make it out to be.
No.
And again, for all of you who like to use moving averages, we do too. Just be careful of your interpretations.
Yeah,
It is
that's all.
not a sign of a change in momentum just because the moving average that you notice is either above or below the candlesticks.
Just hit
That
the
that
brakes,
absolutely has to
but
happen.
look up, breathe, yellow light,
Yellow
slow
light,
down,
hit the brakes, think. Could there
think,
be
just
another
take
explanation?
take a moment, just kind of think about it, and that's it. That's all.
Yeah. So I think that's the end of it here. We hope that gives you, again, some things to think about. That's what we like to do here on Coach's Corner. So hopefully it gives you some more tips to think about for safer trading and to make better decisions. And with that, we will see you next Thursday for Coach's Corner. We'll see you.